Hi friends, how are you? So today I'm going to share you the important information regarding FII data. You might be wondering why the market crashed in the corona time and why the market is going up at this moment. Everyone is wondering, so the economy is down and the GDP is down and all other informations are coming as a negative. Still the Sensex and Nifty all are going up. First, let us understand why the market got crashed. Is it a planned event or unplanned event? And how can you track this kind of data from the reports? Now, first, let us see what the FI data is, how you can get the FI data from the National Stock Exchange. So this data will be updated by the NSE India every day at 5 p.m. or after 5 p.m. Now, first let's see how you can download the FI data from the NSE website. Just go to the Google and open the NSE website. Once after going to the NSE website, you can see you can go to the products over here, and then you can go to the derivative section over here, equity derivatives, and here you can see the current market reports, view all daily reports. And here if you scroll down, you can see participant wise open interest. Just click on this one, so which will open up an Excel file for you. And here I'm just deleting the first row, and this is the report that was this is the report of the December 11th. If you see in this report, the FI's net long in the index is 96,000 and short is by 29,000. So it's clearly giving an indication the FIs are long in the market. So you can see how many net long they are in the market. So almost 66,680. So these are all derivative contracts. Ideally, these longs are created across Nifty and Bank Nifty. Same if you go to the stock futures. So the FIs are long by 7,38,679 and short by 5,83,453. So here also the FIs are long around 1,55,226. So this includes all of the stocks that are listed in the derivatives segment. This is how you can see how many long positions they are carrying and how many short positions they are carrying, whether they are net long on the market or whether they are net short on the market. So this is about the derivative section. So here you can get the futures index data and the options data, such as the index long, index short for calls and the puts. At the same time, you can get the stocks as well. So you can see the stock longs and then stock shorts for the calls and the put. This is how you get a fair idea about what their positions are in the market. Now you have to also see how they are actively operating the cash segment. Now I'm going to the cash segment. So you can just Google it, NSE FII data, whatever the link that you'll get over here, you just open that link over here. I'm just opening it over here. So here you can see the FII net investment in the market. So they brought for 10,000 CR today and then they sold for 6,000 CR around. So their net long is 4,000 crores. And still, if you want to see the further bifurcation among it, go to the link underneath over here. Just open this link and here you can see where and all they have invested. So they have invested in the equity around 3,513 CR and in debt 3,305 CR. Like that, they will be investing in various segments such as equity and debt and other segments. At the same time, this is the cash segment activity. At the same time, the derivative segment activity also, you can see over here how much index futures they have brought today and how much worth of index options they have brought today, how much worth of stock futures they have brought, and how much worth of stock options they have brought. And so, and you can see their net investment over here. This is how you can get the FII data on a daily basis from the exchange. Now, the real question is how this really can help. Yes, I don't understand how this really helps. That is where the real hidden factor is. So you might be opening a lot of business channels and everything, and a lot of news anchors and all. They were saying about the FIs created a lot of shorts and the FI created a lot of longs and all. But a pictorial way of representation, can we see? Yes, we can see a pictorial representation. So I'm just going to the Opstra website. Most of you guys will be knowing the Opstra website. I'm just going ahead and logging into the Opstra website over here. It's a good analytical tool to know the FII data in a very good manner. So let me log in here. I'm just logging in over here. Sorry. It's not logging in. Yeah, I'm able to log into the Opstra website over here. And here you can see a link for the FII and DA data. Over here, let me go to the FII and DA cash segment market. First, it will give you the cash segment information for the past 1 month. So this is the total net investment in the market in the month of November 12 to December 11. If you want to see the individual FI activity, here you have a link for FI buy and sell net. If you see, in the entire November month and December month, FIs would keep on buying it. They were not even selling a single day. So they are net long in the cash segment. In the same way, if I go to the DI over here, so DIs are nothing but our mutual fund institutions and the domestic investors. So they will keep on selling. They will keep on selling. Now, if I go to the FI DI monthly chart, you can clearly observe the real data over here on the FI and DI activity. Now I'm going into this first tab. So everyone know like the crash happened in the month of March. If you see the net investment in the March is negative, the April is also negative, and then February it is a positive, and the January it is also negative. Now coming to the specific to FII data over here, see. So they were shorting the market starting from the January 2020. It was a pre-planned, but the fall happened in the month of March. But you can clearly see they were short in the Jan, and they were short in the Feb, and they were short in the March, and they were short in the April too. Now, if I go to the DI data over here, so these guys are the buyers. DIIs are the buyers in the March market. Now, if you relatively see, so these guys are the net sellers in the month of November and this in the month of December. And if you see over here, the same guys sold in the month of March and they are buying in the month of November. Now, let me go to the derivative segment. If I go to the derivative segment over here, I'm going to the index futures and option data, FI Pro DI and client data. Here you can clearly see on the 11th December, their net future long positions are 66,000 and the calls the 57,000 long, and the shorts they are 68,000 positive on the puts. So like that you can see the data over here in this way. And if you see so it will give you the comparison from yesterday to today. So yesterday their long positions were 62,000 and today their long positions was 66,000. If you go and see clearly, so ideally it means they increased their long positions. But if you see over here, yesterday there are 97,000 longs, today only there are 96,000 longs, which means they did book longs. They did book the longs today. At the same time, today they did book the shorts as well, but they did the profit booking in a more number of shorts. That is the reason why the net long positions is highly positive compared to yesterday data. Now, let me go to the March data, how this data was in the March. So over here, I think this one, yeah, this one, and index futures and option charts. Over here you go. So this is the Nifty chart over here. You can see the dates. Now what I'm going to say is here you have a Nifty chart and you have FI data and the Pro data and the FI and the client. So who is this browser? So this browser actually our broking houses, ideally the professional traders, all those guys are the pros, you can call it as. So we have FIIs, pros, and the DIs, and then clients. Now you wanted to see, let's see how these guys are behaving in the month of March. Now what I'm going to do is I'm going to take out the client and I'm going to take out the pro and FIs. I'm just going to keep the FIs. Same here. I'm just going to keep the FIs and I'm just going to take off the pro. I'm just going to take off the client. Now let's see. Now starting from Jan. See. So this is the FIIs net long and net short positions basically. Now you see from this point, from the 1st January onwards, FII data is a negative. If you see, they are not a positive at all. They keep adding shorts, but market is keep on flying on the 12,000 mark till February end. Now you can see till this time they keep accumulating shorts, and then one dip came, that is at 11,707, and then they recovered some of the shorts, and then again they are adding some shorts, and then if you see, the real panic happened and the market crashed along with FII data. Now at this point, this is the point they came for the short covering. Now you might be wondering, market fell beyond 9,500, but FIIs were only short by 9,590, right? So actually FIIs sold till 9,500. After 9,500, it is the clients, that means we, who actually made the fall happen. Don't you believe me? So let me see the client. So here you see the client. So the clients will keep on long. So till this point, the client is long. After this point, client lost his patience and they were going short and they were exiting their portfolios, and then the FIIs started creating their long positions. So the client was now getting panicked and he was taking off his positions and he was selling it, and these guys FIIs are nicely accumulating it. You see this client now 7,000. So the fall ideally from the 9,500 to 7,500 is actually caused by the retailers, not by the FIIs. The FIIs are actually covering their short positions in between that period. And now they started accumulating it, and by the time the client realized it, and these guys are keep accumulating it, and they are keep going long, and so they went till 10,000 mark, which is like 9,800, and now the client started believing it, saying that, oh, market is going up, so it's time to buy back again. Then these guys have started dumping again. So these guys have started dumping again, and they made the market to fall again to 9,000, 8,800 levels. From this point, they were keep adding their long positions over here, and the client were keep on shorting, and the market is moving according to their long positions. So you want to, so they, as long as their net long positions are increasing, market is always keep going up. So it's always better to track the FI data so that you'll get a better picture whether which side of the market we have to be in. So it's always better if we have kept our positions relevant to the FIs, because big money always holds the control over of it. So this is about the FI data. Hope now you understand why the market is moving up and why the market crashed and who made it happen the initial fall and who made it happen, who made it the next fall. Thank you. I'll try to come up with another interesting video very soon. Thank you. Thank you so much. Jai Hind, Jai Bharat.